Hey everyone, welcome back to GTech Finance. What the heck is happening in the market? For about a week and a half, the market has been pretty tensed. We've seen green days followed by red days, and we've kind of seen an average of more kind of pain, especially the technology sector, which we've been kind of used to because we've been pretty dang blessed since November, and quite frankly the beginning of the pandemic in the end of March 23rd. Everything's just been on a rocket ship. We'd see an average of 5% increase a day, tech stocks reaching all-time high after another throughout technology, and now it's getting spanked in the pre-market, and so is Bitcoin, Tesla and Bitcoin. A sign of potentially people reining in their expectations for these high-flying sectors again. The cryptos and Tesla, both obviously very high-flying stocks. We've got Tesla that previously hit over $900 a share just within the last month and a half. And here and now, Tesla's down 3.24% today in pre-markets, down to $756. We've got Bitcoin failing to find any support at the moment. So Bitcoin essentially free falling. This free fall kind of all began yesterday, and we failed to support around 55,000, and Bitcoin went straight high here to 58, then $366 down, out to 54,300, and it's trying to find some support. It went into the 53,000 range as well, but I'm pretty sure pre-market is not looking pretty today. We've got a few things that are green. GameStop, Churchill Capital, of course, CCIV to the moon. We've got the FRX, former Disney executive founded SPAC here. That's doing very, very well in the pre-market, holding up 10%. But I will say CCIV, the pre-market here, it did even better than what it's doing now. It opened at about 15% up on that news of that SPAC deal potentially going through tomorrow, Tuesday, the 23rd. And so we opened up 15, but that quickly started setting off here as pre-market hours is continuing. We're only up about 10% now, bringing CCIV over to that $58 price range. But I will say, this is it. Everything else is red, darn red. Look at this. You've got Twilio setting off 1.3%. You've got Riot down 13 and eHang down 10%. And it was great for a short-term swing trade, but otherwise, you've got a lot of selling offs. Tesla, here's that 3.2% down. You can't see it, but you've got Square selling. Let's go to the full list right here. What's selling off the most right now? Microvision down 8%, Sundial 7%, Cape, the spec that's advised, or some investors were advised by ARK Invest, but it's not actually exactly or at all invested in by ARK Invest with Cathy Wood. You've got Matterport after the big bump we had on Friday from a CNBC pitch, which I'm so grateful we got into Matterport because the CNBC pitch, but it was definitely giving up a little here with the 23 rise. Almost 23 rise on Friday, giving up about 5% here in the pre-market hours. But yeah, we've overall, the cannabis sector, EV sector, everything selling off a little bit. And here pre-market, let's look around here just to compare also, about 1.9% still in that 28 range, 28.43. But no breakout so far in the pre-market here. Really tenuous market. And it kind of makes us wonder what's going on. Why is the market behaving like this? Few reasons for this. One of them is it's really the more we see this treasury rate go up as people are selling off bonds, it's a sign that the market is expecting interest rates to go back up. And the reason that this is when the reason people only dump their bonds is because, let's say you have a treasury bond, and I don't know, it's a 10-year treasury and you own it and it's 1%, and you're going, I don't know, I think inflation is going to be coming, and I think that if inflation comes, then rates are going to go up, and I'm going to get way more than 1% on my 10-year treasury bond. So I don't know, I'd sell that treasury bond, and when you sell, there's more selling pressure on treasury bonds. What happens is the price comes down. It makes more sense for the sellers because when the price goes down, the yield goes up. So the quoted interest on the 10-year treasury goes up. So that's kind of what we're seeing. So definitely have to pay attention to inflation as one of our factors. A second factor could be margin debt. Margin debt's gone up over 23 in just the last 6 months. More people spending more money on margin means more people with less money accessible to spend into this market, which means at some point you just run out of the cash to be able to continue to sustain the market, to essentially continue moving up when people run out of money, so they stop having money to invest in the markets, and then you potentially risk a market sell-off. This is one of the reasons that you have to be trying to soften your margin. If you have a portfolio, get the margin ideally under 20%, because we're starting to see from Monday a bit more tenuousness in the market. It's really 10 rough days. So, I mean, it's better to sell a bit, lower your margin because it looks like a sell-off's coming or anything, and then take the occasion to buy in a dip, which is a known method to buy in the dip, and eventually you're gonna make a lot of profits, and which is probably the best thing to do. And I think that's it for today. If you enjoyed the video, hit the like button, subscribe to the channel if you haven't already, and hope to see you guys next time.